What is good, everyone? Welcome back to the channel. The market has been ripping the last couple of weeks, and I hope you guys have been taking advantage and having successful trades. Amazon, one of the largest companies in the market. We're going to talk about a couple scenarios that I think are possible for this ticker. And remember, guys, this is not financial advice. So let's get right to it. So for all of you that have been paying attention to the market, you know it has been ripping the last couple of weeks, guys. But I just want to let you know these are not, uh, let's say, healthy moves to the upside. When you have these kind of moves, you have to think like smart money, and you have to think like institutions. Institutions aren't going to exit their positions in the middle or the low. They are going to drive the price up, and then they're going to drop their shares and sell their shares at the top, guys. That's what they do. You could see, especially when they have these gap ups like this, 4 gap ups, 5 gap ups. You could see, especially when they're fast like this, guys. That's my point. See these fast drop, and let's go to a couple other charts. Google, same thing. You could see drop. These gaps do get closed, and these tickers are gapping up. Here's NVIDIA. 3 gaps. We have a gap to the upside for NVIDIA too, but you could see when we have these spikes up here, this is where the institution sells and closes these gaps to the downside. Here is the S&P 500, same thing gapping up, and the Nasdaq, basically the same chart as the S&P 500. But you could see when the institutions drive these prices up, it's for a reason, guys. I'm not saying we can't go higher. I'm just saying be very, very cautious at this time. So let's go over what we came here for, guys. We're going to go to the drawings on Amazon. Everybody knows Amazon. You don't have to be into the market to know this company. And we are going to start in the weekly chart. And you could see since, let me turn the drawings off real quick, you know, Amazon has been a monster stock since, let's say 2016. If you invested, the stock is up just under 900%, probably about 1,000% at its max, guys. And my point is, it's a very strong stock. Excuse me. And I think we have a few scenarios here. So let's go to the daily chart, and we'll bring up the RSI, and you could see how this RSI spiked recently. This move is not healthy to me, guys. And you could see if we draw a line here, the daily RSI is pretty much the max it has been for its entire lifetime. So keep that in mind, guys. You don't base your trades all on RSI, but it is something to, it's one of my main indicators that I like to rely on and use in conjunction with my chart structure. And, that's part of the game. So like I said, I think we have 3 scenarios, and 2 of them are likely the same. So you could see this price action. We have already entered our top. I split these up into 2 zones, guys. This core supply zone at these prices and a top supply zone. You could see last time we got rejected at this supply zone. And if this rally, we have already entered it. If this rally continues, I think we have a future target zone of 271.45 and 281.09. Whether that happens now or based on scenario 2, but we could see that anywhere between this top trend channel and this target zone is my future price goals for this, whether it happens now or later. But you could see we've always been getting rejected at this top of the trend channel in its recent years. So keep that in mind as well, guys. And the second scenario is the trend pullback scenario. So you could see this quick move. We are due for a trend pullback or correction, guys, one or the other. These moves, these spikes don't happen quickly without, a correction, an immediate correction. So I think this trend pullback scenario 2 is more likely than just straight up to this upside, guys. When I say trend pullback, guys, I mean it's a healthy pullback. It's not like a major correction. It's just like like how stocks move. They move in waves like that, and that would be what I'm referring to. This trend pullback zone is 211.74 and 227.11. And let's see why I think this might be one of our scenario zones here that we pull back to. And our friend Fibonacci is part of that. Okay, now let's go to the daily chart. Okay, guys. So if I put the indicators on real quick, you could see we have these 4 gaps here. One of these gaps is in this trend pullback zone, guys. So this gap is definitely in play. Excuse me, guys. This Fibonacci retracement was supposed to be for this, assuming this is the top right now. Okay. So like I said, this gap is in this trend pullback zone. We have our Fibonacci levels are 618 and our zero point 0.7, which is this golden rebalance zone. That's our primary rebalance zone, is in this zone as well, guys. And our 786. If I go back to the weekly, guys, and we know about our 786, or if you follow me, my channel, you're on my Patreon, this is our last structural test of support or resistance if it's going the other way. And you could see it's aligned right on the bottom of this zone. And if I draw a line here, you could see this is a significant price from the past, guys, because what we know about Fibonacci is that the levels have more significance when there's chart structure behind them. And you could see there has been chart structure behind them. We get rejected. They gap the price up in the weekly, support, support. Look at all these rejections here, guys. And it's more evident in the daily chart. You could see the touch points here, guys, the gap ups, the gap downs. And another thing, so I'm going to delete that to get it out of your way, guys. And another thing is that in this trend channel, for the record, you could see there's two trend channels here, guys. The main trend channel that I believe Amazon is trading in is between these two yellow lines. I believe this is just an oversold trend channel, and we've only been in there a little bit of time, guys, but you could see in the history of the chart, it respects the trend channel and the midline. And you could see this midline is very significant, rejection, 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 support, support, rejection. You guys get the picture, guys. So, and that midline is also, in the area of this trend pullback zone between 211.74 and 227.11. So that would be, the 1 and 2 scenario. We either hit this price now or we come back, rebalance in this zone where that golden zone is, or worst case on the 618 on this line. I'll leave that line there for you guys so you can copy it in your charts. And then we continue to the upside if the market, fully commits to being bullish. And as I said before, we have our future price zones, 271.45, 281.09. And that would also make sense to me because that, is another trend channel touch in the future. This ain't going to happen in 2 weeks. It'll take months to play out, guys. It's a multiple trillion-dollar market cap stock. They move slower. And you could see, how it's slow moves sometimes. So that'll make sense to me. A trend pullback, and then it could trend continuation. Oh, guys, and one more thing that I also forgot to mention that also has a significance in this chart is the weekly Ichimoku cloud. And you could see the weekly Ichimoku cloud is right here on this level 2, right next to this trend pullback position. And you could see in the past of the chart, I'll go back a little bit, guys, the weekly Ichimoku cloud has provided support, especially when there is structural support as well, because what we want to do, guys, we want to combine our indicators with our chart structure support. And you could see the Ichimoku cloud, especially when we had support from the bottom of the trend channel, has supported the price, and the price has respected the Ichimoku cloud. It's one of those indicators for this chart, but particularly in which the chart respects it a lot. And you can see that's right at the our levels here that I identified before. So that's just another indicator, the pullback zone, the 786 retracement, the golden pocket. You got the EMA lines here. You got the gap. So this could be a high probability area where we return. And just keep an eye on these EMA lines in the daily, guys. And in the weekly, we're trading above them both. So that's good for now. But, stocks, to get above them, sometimes they have to use, excuse me, guys. They have to gap up or gap down. So we could see a gap down if we have a bit of a more correction. Now on to scenario 3, and I know this is not what you guys want to hear, but this is the one I'm looking for the most, and I hope this happens because I would like to get back into Amazon, and I think we go back into this healthy correction zone at 186.60 to 200.04. That's if the market goes bearish, and we have I call it a healthy correction zone. It may seem like a crash in the market, but it's a healthy correction zone for Amazon. We're still forming higher lows. It'll be another higher low on the trend channel. We have this weekly gap, which is a high probability close area. We have the weekly 200 moving average and the monthly basically in the same spot. You could see that here. It's approaching. So by the time we get back down here, and we're forming, this could be a double top. It's a little messy with this here, but if we do say we'd make it to the top of the trend channel, that'll be about our 30% that I was talking about in the cover, guys. I know no one wants to hear that, but it does happen. Last time we hit the top of the trend channel, we lost 33%, guys. So don't think it's far-fetched that can happen. I know Amazon investors, don't want to hear that, but that is why I'm making this video, guys, for technical analysis for you, so you can make your own decision based on the chart, whether you want to maximize your profits or you want to hold for the long term. And remember, this is not financial advice, guys. So that Fibonacci retracement I did before was for this reason, and you could see I added, I don't know if you guys saw my other video, I added this 1272 level. I did a lot of research on it, and it's quickly becoming one of my favorite retracement levels. You could see this clean move, guys. Go to my Patreon. I'll teach you everything about Fibonacci, how to use it. These clean moves are the best moves, especially for these large cap stocks. And in the weekly chart, you could see how clean it was. You wouldn't do a Fibonacci maybe on one bar. This is a good move. This is a good move. Watch the tutorial, guys, and you could see we responded pretty much exactly on this Fibonacci retracement. So now we could do a 3-point Fibonacci retracement, which is a trend-based Fibonacci retracement, guys. And assuming this is the top, you could see our 1272 level is directly in this zone as well. So, there's a lot of things that are in favor of this zone getting hit. It would still be a healthy correction, guys. It respects the bottom of this macro main trend channel. We have the weekly gap. If this weekly gap gets closed, that'd be very good for the chart. It'd be very healthy for the chart structure. And this is the major area I would like to buy in. And not financial advice, but if we do hit the trend pullback level, say we hit this is also good for a swing trade. You have your supply zones here, and the difference between the core and the top. Core is like the main supply zone where the price usually gets hit before it gets rejected. The top is like the max zone, guys. So if we do come back to this trend pullback and then we see continuation of a bull market, we have anywhere from a let's call it 20% to 33%, guys. But I'm looking for this zone. This zone is ideal for me. So we'll see. I'll do an update as the price gets there. Let's see what happens, guys. I do not expect this last scenario, but if we do have a serious market crash, the major dip zone is between 147.42 and 166.31. That is a long way from now, guys. I do not expect that, but we do have gaps to the downside. This is probably the last gap I would expect to get closed. It's hard to say, guys, but even if we did come down to this zone, it would still be somewhat healthy for the chart because it would be a higher low than this, guys. So, that is not out of the possibility for me, but I don't think it's probable. Let's go with that. And if we check the weekly RSI real quick, you could see we are very getting into the overbought territory, guys. And you know what that means. Usually we have a pullback. So be very cautious at this time in the market, guys. Like I said before, the institutions, they're not going to sell here. They're going to drive the price up, make you believe we're in a crazy sort of rally, just like this, just like this move here. When you have chart structure and understanding of chart structure, you can base it off that instead of emotion, guys. And that's how I want you guys to trade. I want you guys to trade technically and not emotionally. So stay sharp, guys, and have a good trading week next week.